Alright traders, I'm back again with another video. Yes, I know it's been quite a while, but hopefully I'll start putting out more videos here in a while, in a short period here. Within the next 2 weeks I should be able to start putting more videos out on a daily basis, getting more in depth with the Ichimoku system and just helping somebody learn and understand it. I'll try to post more of my trades and try to do them live trades before I take the trade or when I take the trade. Um, Let me show you a trade that I was in and I got out of the trade. I shouldn't have gotten out of the trade, but some things happened and I got out of the trade. But let me show you right here. You could see I made 102 pips right here. I mean 100.2 pips. So that's where I got into the. That's where I got out of the trade and made 100.2 pips. But see, my target level was right here where this red line is, and I got out before the target level. So this is a support level and also my target level for my trade. Now this is the daily time frame. I trade the 4-hour time frame. Now what I do with the daily time frame, I look for support and resistance levels and I mark those levels, and I look for the market to go to those levels on the 4-hour time frame, because they're going to be stronger levels on the daily time frame than they would be the 4-hour time frame. Even though the 4 hour is going to be strong, it won't be as strong as a daily support level. Okay, and then a daily support level won't be as strong as a weekly support, and so on. Monthly support is stronger than a weekly support. But this is the daily support level right here, and it's my target for my trade. And you could see price just now came down to that level and bounced off of that level and started going back up. You could see some people are already getting out of the market here, so you can see what price is doing right now. So this is going to be a level. Now if this level is broken, we'll look back to see where our next support level is and where we think the market will go, because the market has a mind. It knows where it's been before and it tries to go back to where it's been. You know, it goes back to those levels that it's been, because basically it's people doing this. Traders making levels. Okay, not us little retail traders, but the big boys making these levels, and the market knows where these levels are, and when it gets back to that level, that's where everybody starts looking, and that's where everybody starts doing things, and that's where you have action at that support or resistance level. So there's that support level there. Now this is the daily time frame, as I said, and I want to show you a few things with this Ichimoku system. The Kijin Sen is the dark blue, the Tenkan Sen is the light green. Okay, those are the two that we're going to be looking at right here. This is this pink dash line. This is going to be your Chiku span, and then here's your cloud and everything. You can see these flat tops, this flat top. These are strong support and resistance levels, and this is how I got into the trade on the 4-hour time frame. But when price is far away from this Kijin Sen is like home for the market. So the market's going to want to retract and go back home for a while and then leave, and then go back home and then leave. So the market knows that it doesn't want to get too far away from home before it goes back to home to visit for a while and then leaves again. Okay, so if your price is almost like 300 pips away from the market, from the Kijin Sen, you may not want to get into a trade. All right, so you have to be careful, especially on the time frame that you're trading. Now on this daily time frame, when I got into the trade, I think the market was like basically about 100 and something pips away, 160 pips away. Now here is going to be, I think this is going to take us up to 266 right here. The support level is like 266 pips away. But let's go ahead and look at the reasons of why we get into the trade. So when I'm looking at this daily time frame, I build my support and resistance levels, and I look at the sentiment of the market. I want to see if the market is bearish or bullish, and I could see it's very bearish. Every single sign is bearish. All right, you had a TK crossover right here, and this is a bearish crossover, and it's a strong signal because it's in bearish territory. So when you get this signal in a bearish territory, which is the bearish territory is below the cloud, and bullish territory is above the cloud, and neutral territory is inside this cloud, because that's turbulence. You don't want to be riding in turbulence. You want to see what you're doing, so you want to be above or below the cloud. You don't want to do anything while you're inside the cloud, really. Now there's some exceptions, and I'll show you what they are. What was I saying here? Okay, we got far away from the Kijin Sen, But this is a strong signal, like I was saying. This crossover is a strong signal because it happened in bearish territory. So a bearish signal in bearish territory is very strong. But if you got a bearish signal in bullish territory, it's not as strong of a signal. Okay, this is based off of the Ichimoku rules and the way the system's been developed. And I don't dispute it because many people way before me knew about this system, and I just trade it the way that it's been made. If I see some things that I can add for myself, that's what I do. But I follow a lot of the basic rules and I do a lot of basic stuff. I don't try to make this system any harder than it has to be because it's not really a hard system. Once you look at everything and know what you're doing and looking at, boom, you could look at a trade and know what you want if you want to get into it right off the bat. Now, if we're 300 pips away from this Kijinsen daily time frame or 4-hour time frame, whatever your time frame is, you don't want to get into the trade, so you would let that trade go by. It would be a bad trade to get into because the market's not going to go that but so far away from the Kijinsen before it retraces. Now all of our signals, like I said, were bearish because you got this crossover. Price is below the cloud, that's bearish. Your Chico span is below price, that's bearish and below the cloud. And then this Kumo twist, which happened here, is a bearish twist. Your cloud is bearish. Okay, so those are the things that you're looking at right now. We go to the 4-hour time frame. That's the time frame I trade off of. All right, now I'm on the 4-hour time frame. My time frame I trade from. You could see this line here. This is going to be that support level and that target that I was looking for. That's going to be my target where I want to get into, get out of the trade, take my profit. Now I got out of the trade way before I needed to. Now when I look at the 4-hour time frame, I can make more levels of support and resistance. But let me show you. When price was down here and then price moved up to this cloud and got inside the cloud, I needed to see what was going to happen because turbulence is in here, so you don't want to do anything. You don't know what's going to happen. So I was looking for either a breakout or a hold of this support, this resistance level. Now see this resistance level, because of this flat top right here, I figured I'm going to look for the bounce. The first time it didn't go through, so I played it as a bounce. I played it as a strong support resistance level. So when it hit the top of that cloud again, I got into the trade short because we didn't have a Kumo breakout. So we had a level where this was going to hold as resistance, and I got into the trade right here and I took it down to here. Now see, this was the level that the first level that I looked at on the 4-hour time frame, because you could see this fractal level right here. So when I had this fractal level, I also look at that where that's my first target level, and then my next target level is this bigger, strong fractal level that was on the daily time frame. But I look at this level as a level where it could retrace also, because this is still going to be a small, very small support level. But now price came down here. I got out of the trade. I shouldn't have gotten out of the trade, but what I did also, sometimes I do a couple things. I make a target, or I'll think of how much I think that I can make on this trade based off of the support and resistance levels. And if I'm not going to be able to really watch the trade, I don't like to lose much. I don't want the price to go back up here and then stay up here for weeks or days or whatever. I want to get my profit, so I took the 100 pips and I got out. Now you could see price bouncing off of this support level down here, because like I said, there's a lot of people that see this level, and this is where the action is going to happen. So either price is going to bounce off of this level and start going up, or price is going to break this level and go to the next support level. Okay, so I'm going to wait and see what happens. But based off of the Ichimoku system, and especially on the daily time frame, it's bearish. And now looking at this 4-hour time frame, it's very bearish also, because you have this TK crossover, you got your Kumo twist twice. Now this twist just turned bearish, okay, and then price is below the cloud, Chico spans below price. Every single thing on both time frames is bearish. There's not one thing on this chart 4 hour time frame or 8 hour time frame that says, hey, let's take a long trade. Now you could do a couple things if you're trading against this trend here. This is a small trend, but the market's been going down. Now you could take a bounce off of this level, and who knows how far it will go, but I don't do that. If I'm going to trade something, it has to be within a range. Now if the market was ranging, you know once I see it start making this range, because now this level may hold, and then this top level may hold, and then the market may range in this area for a while, then I can start making trades. But I can make a trade off of the top or the bottom level. So I can make a trade off of the support or the resistance level. So you have two levels right there in that range that you can trade off of. Okay, so you have levels or areas where you can get into a good trade, and you don't have to have a big stop loss. You can play it tight. So if you got into the market here and you saw that the market was ranging, and you got in on this level and you took a long trade, you know you don't have to make a big stop loss. You can look at the longest wick and go a little bit below it, and you see that you'll have that support level near you. You always want to try to trade near a support or resistance level. You don't want to trade in the middle of anything. So suppose this is my support level, and then I had this resistance level up here, and I get into the trade right in the middle of these two levels. I mean, what good is that? Because I'm so far from the resistance level and I'm far from the support level, I have nothing to really put my stop loss. I would have to put it deep, way down at the support level, or way up at the resistance level, and that makes a big stop loss. I always put stop losses at support and resistance levels, so that's where I want to be. But like I said, I made 100.2 pips on this trade, and what I missed out here, maybe 50, 60 pips. So I could have had 160, 70 pips, but I didn't. I also, you see, I didn't follow my own rule. I had a support level there and a target level, and I should have allowed the market to just go to that level. Now also, you can have a trailing stop loss. You could put your stop loss, move your stop loss down every time, move it with the blue line here, the Kijinsen, just be a little bit above it. But see, I don't like to wait for the market to come down and then go all the way back up here. I lose all that, and then what if it doesn't come back down? What if it starts going the other way? I've lost all that target, all that profit. So I don't want to do that, but that's one of the ways that you trade the system, okay? But it's not one that I like to really do. Now if the market's really trending pretty good, it's not too bad, but I like to always put my trailing stops at fractal levels. Fractal levels are big for me in all different ways: support and resistance levels, stop losses, targets. Okay, I guess that's about it right now. What I'm looking at on the 4 hour time frame, it looks like I think the market may range in this level for a while. It may do like I told you. It may come down, bounce off of this level, and then go back up again. Now would I get into a good strong long trade is if we break this level here. So it'll be this top level here at 1.48622. If price breaks that level, I'd look for a long trade, and then we'd also be above the cloud. Now if price breaks this level, this line right here, and goes lower, you could get into a short trade. So you see price close below this level here, you could get into a short trade. Okay, but traders, that's pretty much it right now. I think I'll close this out, keeping it basic and simple, and no need to make this any more confusing than it may look. So it's really not confusing, but just look at some of my videos and you'll just see how I trade this thing, and I'll keep bringing up more videos. I'm going to start being more active with this. I really want to be a blessing to someone. I really want to help people, and I'm not in this for no profit. This is what I do for my own self. So if I can make money and I'm making money, why not share the wealth? You're not hurting me it's not hurting me by showing someone else how to do this at all. So if I'm making money, why would it bother me to show you how I'm making money? I'm not selfish. I'm not trying to keep it to myself. It does me no good. But I will keep my money to myself, okay? But you can have some of the knowledge. But traders, until next time, hopefully I'm being a blessing to you. Stay tuned for some more videos, and God bless. So long.